To another video. So today we're going to go cover a trade recap for a trade that I did miss, unfortunately, due to I was at a Drake concert. Luckily enough, I'll throw up a few clips right here.
Y'all ready? Y'all ready? Yeah. Hey, I'll be.
Okay, so so today we're going to just cover the trade that we missed and just all the key information with time elements and things of that nature, and a new kind of system model setup that I am currently backtesting and forward testing. So let's get straight into it. So we'll start by, I'll make this sort of quick one, but if we go over to our weekly outlook on our trades page here, you can see that on that Wednesday, the day that we did miss the trade, we do have a medium probability day, just because if we look at our notes, it does say days that have 10 o'clock news are medium probability, just because you should be trading after that, unless you kind of certain where that news driver will expand. And also days before 8:30 news, days that aren't FOMC and CPI and FP, because those days before those days we don't trade. So days that are not these news releases, we can expect medium probability. So as you can see, we did have Thursday having 8:30 news, and without Wednesday the 10 o'clock news. So medium probability day. So it wasn't looking to be super high probability, but it did end up being quite decent. So we'll go over that trade right now. Let me just click on it. So you can see I just annotate, obviously a trade that I took would be this. So you can see I had a break even and I lost there. But typically you can see on days that I win, I put a green arrow. Days that I don't trade but I like the price action, I journal it. I put this little blue circle, and then days that I lost with the red. So you can see, obviously in the month of Feb, we haven't taken any trades yet. Being super picky and precise, and with the setups that I take. But we did miss this day because I was away. So I would have taken this trade probably and end up with a nice juicy win. But we will go in there and have a look at the trade anyway. So I did journal a few screenshots here, but we'll take you over to the charts and we can see price here. So this is the 15-minute time frame. So let me just delete this NWOG right here, so you can just see this massive new week opening gap that we had here. It's in this purple box. It does look a bit messy. So we'll just remove this one. Get that out of here for a second. Beautiful. So that being said, Tuesday also had a nice move. Similar to Wednesday, funny enough, it's the exact same trade. You can see actually previous day high up here. We come into midnight low, 1 hour gap, new swing low in this upward trend. So you can see low, higher high, higher low, higher high, higher low. Then we expect to come back, make a higher high. So in this market maker buy model that we have here, we have a nice clean setup as well on Tuesday. But here on the Wednesday, you can see that we actually do have a nice market maker buy model. We can start with the 4 hour right here, actually. If we go on the 4 hour, you can see quite clearly that, where is it that we annotated it? Right here. Don't know why it's not showing. See on the 15 minute, we have where is it? Here, we have this 4 hour BPR. It's not showing. There you go. Okay. So if we go on the 4 hour, we can see that we have this balanced price range. So this is a key PD array that could be tapped into in this swing low. So you can see we have obviously an inverse fair value gap right here. So if we delete that for a second, you can see a gap right in between these two candles. Boom. Right here is an inverse. Okay. And then we also do have a fair value gap right here. So you can see in this expansion move here, we also create another gap. And if these gaps overlap, we have a balanced price range. So you can see right here, our balanced price range and price taps into there. Okay, now back on the 15 minute, which is the aligned time frame of the 4 hour, this is why you need to know aligned time frames, because this is just a beautiful trade knowing that. So you can see here we're in that 4 hour balanced price range right here in this orange box, and this is also the 1 hour, by the way. These are 1 hour candles, so you can see the trade on the 1 hour. But super simple. We're not going to overcomplicate it, but you can see this is the midnight opening price right here. So midnight MOP, midnight opening price, and this is the vertical line right here. So you can see this is where midnight started. Now what happened, and this is what we're looking for in our setup right here. You can see weekly profiles. Obviously, we're looking bullish for the course of the week, similar to last week. But what we're looking for is internal daily profiles. So what can we see here? What questions can we ask ourselves? What did London do? Did it manipulate into a higher time frame PD ray and get a change in stated delivery? No or yes, and that determines what type of daily profile we're going to have. Okay, so let's answer that question. What do we have here? In London session, which is what, between 2 to 5. So let's draw a little box here. 2 to 5. There you go. And we'll put that color as, let's go, put it pink. So you can see this is London right here. Now, what did London do? Did London tap into a higher time frame PD ray? Well, look what we have here. We have a 4-hour balanced price range. Okay, that's our higher time frame PD ray. And in what? A key time. Look, this is London. London did this move. Exactly. Look, it couldn't be more precise. At 5 o'clock, we put in the low day. At 5 o'clock. So, let's delete this now. Now, if we go back to our notes here, what do we have here? For a London protraction, we're looking for a 2 to 5 to put in high or low of day. So this case is a bearish example, but on Wednesday we did have a bullish example. But you can see higher time frame PD array. Okay, premium IRL. What do we have? Boom, 5 o'clock put in that low for us. Okay, now we're looking for expansion. Okay, or a change in state of delivery. Now, if we go out of that and go back into the charts, you can see now that we tapped that gap, how do we confirm that it was actually this is the reversal? And obviously SMT is a very key factor, but I'm gonna save some more time. And there wasn't actually any SMT here. Okay, so with ES there was no SMT, but there could have been with YM, with the Dow Jones, but I don't usually typically use that, so I'm not going to count that. So we didn't actually have SMT, so it makes it a bit of a harder read. Potentially with YM, but like I said, I don't use that. So we had the 15-minute change in state right here. So that is our reversal confirmation. So you can see price started to come up, and we inversed it at this candle right here, the 715 candle. But what else are we looking for? We're looking for an inverse fair value gap. Okay. Now, typically we will have a fair value gap here, like you can see right here. We did have an early indication of a change in the state of delivery. Okay, which is our inverse. We did inverse this small gap, and obviously on hindsight, but played out. But just to make sure, we're looking for a 15-minute change in state of delivery. So right here, this could have been the trade entry. Right here. As soon as we inverse the gap, that is it. Put our stops at the low. Okay, and it could have been actually at this low too, because this was not a protected low. We didn't have SMT, but obviously I'm using hindsight, and I'm going to use it. We're putting our stop right here. Okay, now this was a potential good trade right here. You could have put your stop right there, and that would have been perfectly fine. And if price did come lower to sweep you out, then so be it. But again, sometimes it can do this, like it just did right now. So, and then obviously stops at the I'll put our TP at the top here at previous day high. So just another bit about the trade here. You can see 2 to 5 obviously puts in the low. So we had a manipulation below the midnight opening price. Look, midnight opening price. We manipulate low into our gap. Beautiful. Now we're looking to target ERL. This is our IRL move. And again, if we look at another key factor, if we open our previous day range here, this right here, this indicator shows the previous day's daily range. So obviously this orange line right here is covering this black line right there, as you can see. But pretty much this is the high of the day, okay? And this is the low of the day. As you can see by here, these wicks. This is the low, this is the high, and this is the medium range. This is the equilibrium of yesterday's range. So you can see we obviously tapped into the equilibrium, and then we were bullish from there, okay? We didn't have to come and sweep previous day low. We came into the equilibrium, into our 4-hour gap, and that was good enough to position along. So let's close that again. Boom. Okay, so now that we know that this was our key reversal area, now we're looking for the reversal signature, which is our change of state, and the inverse. So you can see we did have this 15-minute gap right here, tapped into it, respected it, and then we came back later to inverse it, okay? And you can also see that we had a build-up of low resistance liquidity right here. So you can see we're making, so there's a high here, and then we're just shy of sweeping that. So this is low resistance. Come back here, form another high, but we're not taking out any buy sides. So you can see high here, boom, high, 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 highs, and these aren't getting swept. So this is our low resistance signature right here, okay? Now we can see anticipating a bullish day, put in low of day in London, which is we're looking to see a London Protraction daily profile into our 4-hour BPR and a retest of previous day equilibrium, like you see here. Okay, we've got our change in state right here and our inverse, and that could be a good enough entry. And then we have a 6-hour trade right here, straight into previous day high. Okay, and now other key things to note. We do have more time elements to look at. So we have 7 to 10 to put in our retracement low in our example, retracement low into another gap. Do we get that? Let's see. Obviously, looks like no gaps were formed in this expansion. You can see this is actually looks very choppy. So if we went over into the 3-minute, let's say, you can see, yeah, this was a very hard trade if you were trading New York, because this trade was positioned at 7 o'clock and we rode it all the way into 12. Okay, so if you're trading this in New York, this would be a very hard read, but that's why you have to obviously use the higher time frames, guys. If you're looking at the 1 minute, 3 minute, 5 minute, 5 minutes okay still, but if you're looking at the 1 minute, even like 3 minute as well, you're going to see all that price action and your bias is going to change a lot. I mean, just look at these wicks. That's why you just have to position yourself on the 15-minute or higher time frames, because this is what you're going to see, more cleaner price action. I mean, let's just look at this for now. Not that. Let's delete the wicks, and then you can see how clean price would have been. So if we see wicks right here, remove the wicks. Oops. Remove the wicks. Look at that. Look at this. Price just moves up. But when you're playing on the lower time frames, you're going to get stopped out a bunch of times when you play with these wicks, okay? So scope out and use the higher time frames, but we are going to use the wicks, obviously. But yeah, super simple trade. That was it. That's all we're looking for, guys. We're looking for a key level. Okay. Now on the 1 hour, this is what you can see. Key level being hit at these 1 hour. See these two bearish 1 hour gaps. Oh, sorry, these two bearish 1 hour candles into the gap. And now we're looking for C2, candle 2 to frame a trade. So candle 1 tapped into the gap. Candle 2 swept the previous candle's low. So you can see we swept the previous candle's low right here, and then we take a trade. Wait, I think previous candle low was actually right here. So we sweep with this candle. You see this exact candle right here. Take out these lows. Take out the previous 1 hour lows, and then we look. That was our signature to go long. Look for longs because that was in our gap. So it's a perfect trade. What else do we have here? So this is literally another screenshot. You can see we're making higher highs, higher lows, higher highs, higher lows, and we're looking to position a trade from point A to point B, which is our swing low to form into the swing high, and then there you get market maker models. That's pretty much just how it is. So you can see candle 1, candle 2, and candle 3. So candle 1 is into our gap. Candle 2 also, okay, sorry, candle 1 makes the formation. Okay, there's the range. Candle 2 goes into the gap and sweeps the low, and then we're looking for reversal with an expansion with candle 3 into C1. Okay, now that you can go that route, but you can see obviously here we had a market maker buy model, and you didn't have to just take profit at these highs here because there was a clear narrative into these highs. So again, yeah, beautiful trade, guys. Beautiful trade. How much ticks was it? You can see it was a 782 tick move if you didn't take any partials. But yeah, that was pretty much the trade, guys. You can see here how I've annotated it right here on the 4 hour. You can see obviously with Monday dumping lower like this, like we did last week. Last week we created a new week opening gap. And then here this week again, we formed another new week opening gap with ES taking previous week low. Okay, so ES took previous week low. Now we have bullish SMT, and it looks like we're slowly grinding back up into these highs. Previous month high and previous week high is my draw on liquidity. But you can see, oh, that was the 4 hour. We tapped into this 4 hour gap right here. So this was a good enough swing point. You can see we're making high highs, high lows, like right there. And the 1 hour, also we in this also 1 hour gap right here. But yeah, we're in this 4 hour balanced price range. That's what we're looking for. And then obviously the aligned time frame is the 15 minute, and you can see exactly how this trade would be positioned. You see what the 15 minute change of state, inverse, enter, boom, TP. I mean, it really is that simple, guys. You don't have to overcomplicate trading. As long as you have a system, know which days not to trade, which is just as important as knowing which days to trade. And you can get clean setups like this. Okay, clean setups. You can see 10 to 12 putting in low or high of day, and what happens is, look at this. Oh my days! Is there actually? There must be a time. See, there's a price label. Is there actually a time label? Flag mark. Let's see this. Okay, we flagged that. Look at this, exactly where this flag is. 12 o'clock, guys. Now let's see what happens after that. Oh, there you go. There you go. I mean, we do go higher. But look at this. 12 o'clock puts in the high of day. 12 o'clock exactly. And what puts in low of day? 5 o'clock exactly. So, guys, it really is the same thing repeating day in, day out. When you just know higher time frame narrative, know your drawn liquidity, know your entry model, that is it. You really know. You really don't have to overcomplicate it. It's really that simple, guys. But yeah, that's enough for today. Won't keep you guys too long. We'll catch you guys in another video, hopefully with an actual trade that I took. This is obviously with the benefit of hindsight, but nonetheless a very good setup that I did miss, unfortunately. But yes, see you guys in another video. Okay, just a cheeky little announcement. If you guys want the same Notion template that I've been using in my videos and you post all in this video, just click the link in the description and you'll see a page like this, and then you can buy it. But guys, don't forget to use code VISION20 for 20% off. Okay, thank you guys. See you next time.